And welcome back. You are watching The Drop. Let's take a look at the global picture and local firms asking what lessons there are from reporting season in the US and elsewhere as we enter our own earnings reports. Let's get some detail. Frank Dinelli joining us from MA Financial. Frank, good to catch up with you again. So US earnings season just coming to an end as we just get going locally. What have we learned, particularly from what we've seen in the States?
It's great being in Australia actually, because you do get to look offshore and see what happened in earnings season over there and what that means for the Australian economy and for companies going forward. I think there were two really interesting takeaways over in the US, and the first one was in the banking sector, so what happened with the results of major banks over in the United States and globally, and secondly, what were the takeaways in what I'll call the real economy, in particular consumer-focused businesses? And we can talk about each in turn, but there were some really interesting takeaways there.
Well, I mean, the consumer-focused businesses are all important at the moment, particularly as we look at the state of the US economy in the face of rising interest rates. And that's what the Fed and, of course, corporates are looking at to see whether that demand is holding up.
That's right. And I think we've seen the signs of waning demand on the consumer front. If you look at bellwether businesses like a Walmart, Walmart's come out with now 2 profit warnings in 10 weeks. You saw Unilever say that there's significant cost increases in their business and a consumer shift towards more value-oriented products. You saw the same with businesses like Procter & Gamble, even McDonald's saying that consumers in their franchise and customer-owned stores are now looking at purchasing value-oriented meal products. And I think that what that reflects is that with inflation and cost of basic living increases starting to bite, consumers are changing their behaviour, particularly for discretionary spend.
How are loan books looking at the moment? And I guess also the potential for bad debts in an environment where interest rates are rising.
Yeah, a lot of people looked at the bank results offshore and said, you know what, credit looks really healthy in the likes of JP Morgan, Wells Fargo, Citigroup's books. And that certainly did look to be the case, but that's a backward-looking measure. And if you look at what those institutions did, they took some quite significant loan reserves on a look-forward basis. So JP Morgan, I think, took a nearly $430 million reserve against future credit performance that could deteriorate. Similarly, Wells Fargo, nearly $600 million reserve. And so what those banks appear to be indicating is that some of their customers will start to come under stress, and they're starting to provision for that early now. And I think that's not just on the consumer side, but also on the business front.
Yeah, well, that's a good point to make. But certainly on the consumer side, we look at those fixed rates that are going to roll over, what impact that will have as rates rise, and I guess just the risk that poses, particularly to the lenders.
This is a big wave in Australia in particular. If you look at CBA and Westpac as an example, CBA has $91 billion of its home loan book that are fixed rate resets occurring next calendar year, so in 2023. And in Westpac, I think it's $86 billion. So that's a lot of the book that's going to go from very low fixed rates onto a new standard variable rate. If you just look at the RBA data, some of those fixed rates are in the low to mid twos. Now, I don't know exactly where standard variable rates will be next year, but I would guess that they'll be in the 5s to 6 range. And so customers are going to see upwards of a 3 percentage point increase in their interest costs, and that's going to have a significant increase in their in the cash flow that they'll need to service their mortgages. Now, that doesn't necessarily mean that they'll default, though.
Right. Okay.
And I think that's an important point, which is that customers are going to have to use more of their income to service their mortgages. And I think in Australia, that won't mean that they'll instantly default. Now, some people are saying that they will. I think what will happen is that they'll significantly contract their discretionary spending, and perhaps some of the more fringe types of debts that they may hold could come under pressure, and you'll start to see the arrears there first. It won't be the mortgage book that comes into distress immediately, in my view.
If there is that pressure emerging, certainly among the financials, are we likely to see M&A activity increase? And I know you've made a point here just as far as that ANZ Suncorp transaction. Are we likely to see more, do you think?
There are a lot of companies in the financial space that do look to be trading cheap. I mean, if you look at some of the non-banks, like sort of Pepper, for example, these are trading on mid single digit PEs, 5 times PE, for example, for businesses that have carved out a significant share of the lending market, that are growing, that are gaining brand affinity with customers. So you've got some quite interesting and established platforms that are trading cheap. You might see M&A activity in the space for that reason. That said, some of these companies do have quite large existing shareholder bases or major shareholders, and so there's a shareholder dynamic there to consider. If you look at something like the ANZ Suncorp transaction, companies don't ordinarily just buy another company for an economic purpose. There's usually more of a strategic overlay, and so if I was, your viewers or an investor looking at potential takeover targets, I'd be thinking more about what can an acquirer gain from this company strategically. Is it an interesting piece of technology, a unique pathway to market, a good brand, or some other phenomenon that makes it interesting? And I think that's probably more what's behind the ANZ Suncorp transaction than just an economic deal.